The bulls push higher on a choppy day in the market. Who's in control? This is Invest with Jacob. Okay guys, so the market pushed a little bit higher on the close after a very choppy day where we saw both up and down swings. And now the question is, as we head into the end of the month, end of quarter, and a holiday weekend, who is in control of this market? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the S&P 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, so choppy day yesterday. The market did close slightly higher, but did not give us any full breakouts in either direction. So let's jump into the chart and take a look. Okay, guys, so here we are on the 5-minute SPX chart. And as you can see, we got a pullback at the open. They pushed it up to a new high here, tagged the 50% retrace, then kind of dropped off of that and chopped sideways most of the day, closing slightly higher. And essentially what we're looking at, guys, is this the wave 4? Okay, of that wave B that we've been talking about higher in the bigger picture, where we would need a wave 5 up here toward the 4,500 area to complete this move, and then we would start to look for a move down off of that. Okay, that's the first thing we could be looking at. Or the second option would be that we have topped here and we got a wave 1 down. Now we're getting a wave 2 up, and we'd look for lower from there. So let's dissect those two potential paths in a more micro count. So I do think that in both cases, we need lower before we see higher. So what do I mean by that? Well, off of this top, okay, even if we are going to go up in this wave 5, I don't think this is deep enough for wave 4. It's possible, of course, it can be where we bottomed and come up from there. But I don't think this is going to be deep enough for wave 4. And so what I'd like to see is a wave 2 or B, okay, depending on whether we're counting this as a 1 or a wave A. So we're either counting this as an A and then B up and then C down, or we're counting it as a 1 down, a 2 up, and then you'd start wave 3 down, which would look more like that. So in either case, I think we need lower. If we start with the bull count, I would call this wave A, and we are either done or trying to complete wave B. Again, they can go a little bit lower here and then bring it back up into the 4402 to 4420 range on the SPX and then down from there. I do think, though, that we need a C wave down after that. So they can take it a little bit higher, but then I would look for C wave down into about the 4260 area, maybe even a little lower than that, depending on how high the B wave goes. 4260 to 50 area, and then we would come up in this wave 5 higher up toward the 4500 area. So even in the bullish count, I don't think this is going to be the wave 4 low. It certainly can be. It's at the shallow end of a qualified wave 4, but I'd want to see deeper here in a standard retrace for a wave 4. You'd want to see it again down toward the pivot in that 4260 to 4100 area, and then up from there in 5. Now, if it's going to be the bearish count, okay, it's going to look exactly the same, where you have wave 1 down instead of wave A. You have wave 2 up instead of wave B. Then you'd look for a wave 1 of 3 down that comes down to about this low, a wave 2 of 3, and then a wave 3 of 3 that breaks down to the downside. And if that's the case, we would be looking a little bit lower, and then we'd also be looking for a 4-5 after that, because the difference, guys, between an ABC and a 1, 2, 3 is just the 4-5. So if this is a 1, 2, 3, that can also be an ABC, but then if you get a 4 and then one more low, you have a 4 and a 5, and that's the difference between a corrective move and an impulsive move, just the 4 and 5. So once they get down to a point where we think they should bounce, the bounce will tell the story. If that bounce is impulsive and starts to take off over the pivot to the upside, then it's much more likely we're in that wave 5 higher. If it holds the pivot like it's supposed to, about the 1.0, and then comes back down in wave 5 towards the 2.0, then it's going to look much more impulsive to the downside, where we're trying to build out a wave 1 of that bigger C wave to the downside. So I do think in either case, even if they push it a little bit higher up into this 4402 to 20 area, before we take out this high, I do think we probably need at least a C wave down and then up, or potentially a wave 3 down that doesn't come back up for a while. So that's what we'd be looking at on the SPX. Over on the NASDAQ, Okay, similar counts on the NASDAQ. I'm not nearly as excited about this move down as I am on the ES being a wave 1. And so it does make it more likely it would be a wave A. And in that case, we'd be looking for a wave B up into that 15,239, 15,330 region, and then a C wave down. And this structure is much more supportive of a ABC down and then come back up and take out this high. So this is something to keep an eye on. Remember, NASDAQ's been telling the truth the whole time. And so if they are in a more corrective looking move down, even though I can make it a count of 5 waves, I don't love this wave 4, and the structure is just not great. Even though I can make it a technically valid 5 waves, it's something to keep an eye on because, again, the NASDAQ has been telling the truth. And then from here, from this 15,239, if they come up this high, keep in mind they've already pushed over the 50% and almost to the 618, so we could be done with the move up. But if they do come up a little higher here, we would expect a C wave down. And then from that C wave down target, just depending on where this wave B would go to, we would have our target to the upside for wave 5 of that bigger B wave up here back over this high. So NASDAQ could, again, push down. I would look for a B, C first and then higher, potentially take out this high. That would be the bullish count for the bears. As I said, it is technically still valid as a wave, a 5-wave move down. It's just not pretty. So you still could have that 1, 2, and again, the difference will be you get the 3, 4, 5, or the wave 3 down, just like you'd see a wave C, and then you get that 4 and 5 to the downside, and that would be kind of the difference between seeing that ABC down where we come back to highs, or seeing a wave 3 down where the high is in and we're starting lower in that C wave. So overall, we should have some clarity over the next few days into the weekend. Next week is a holiday week, so light trading the first few days of the week. I will be out Monday and Wednesday, so there won't be any videos until Thursday. So we will keep a track of this into the weekend, and then that should give us a little bit of clarity in this move off of the top. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you right over to our website. Once you're there, check out our membership plans area. We have 2 monthly plans that are outstanding, as well as our Elliott Wave for Beginners online course. You can buy this a la carte, or it is included in our monthly plans. This course is incredible. It is 25 videos where I go over my chart setup, my mindset, all of that, everything you want to know about just how to get started, as well as I break down every single wave in the Elliott Wave sequence, show you its targets, its failure points, what to look for, how to do it, and then I show it in real time on a chart so you can see what it looks like in an actual trading environment. This course has helped many of my traders improve their trading immensely just immediately after taking it, just so they understand the basics of Elliott Wave and where to place hedges, how to trade off it, all that great stuff. So it's an outstanding course, guys. If you've ever wanted to learn Elliott Wave, this is the place for you. It is $67 a la carte, but we do include it in both monthly packages if you are interested in those. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are in the counts as well as what to expect, and that training material you just saw. We trade the SPY and the QQQ and we swing trade, which means our trades can last anywhere from a few days to a few months, so we don't trade quite as often as a day trading room does. However, if you are interested in day trading as well as individual stocks, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, day trading, and PT's reduced risk binary method that just crushes the market. He gets you in at a cheap price and gets you big multiples on your money, and it's how he structures the trade that's so unique. Something you really have to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we would love to have you in these rooms so we can all make money together. Okay, key takeaways for today. Overall, a little bit messy here coming down. When the bears did not follow through, we do have a potential wave 1 to the upside, but I do think that we need to see a wave B here and then a C wave down in the bullish count, or a wave 2 and then a wave 3 down before we see that potential move back over this high or the potential move down in C. So I do think we'll get some clarity on that count this weekend. Then on the NASDAQ, same type of setup, but it's not as clean, where the potential for the wave 1 down isn't as clean as it is on ES, which does support the move back over this high after a B and C wave, in my opinion. They can push this a little bit higher before we move down, but I would look for a B, C, and then up in that final wave higher that would take out this high, if that's the count that's going to play out for the bears. This would be wave 1 down, this would be wave 2 up, and then we'd start down from there. Guys, that is the market update for today. I will talk to you tomorrow.